On the 17th of July, PepsiCo released its earnings, and they were above expectations. The revenue and the earnings were much higher, and the stock went up 7.5% that day, which is very bullish. But what exactly happened? Well, in this article we can see that PepsiCo revenue rises despite lower North America volumes. So what's going on basically? PepsiCo is selling less units, but because they raised the prices, that's why they still had a high revenue. Even though they sold less units, they still made more money in North America, which is the biggest market of PepsiCo. But if we look at the international market, there was actually growth as in the volumes as well as in the amount of units sold. So why is PepsiCo able to increase their prices? Because it's a wide economic moat company. We can see here they have strong intangible assets, they have a cost advantage, and this business has a very efficient scale. So today we're going to find out what the effects are of the earnings on this company as an investment and whether we should buy or sell. Let's get started. We are now looking at the historical chart of PepsiCo, and we're looking at monthly candles. We can see all the history from 1968 to 2025, which is more than 50 years of historical charts. And here's an indicator of the RSI, which shows you whether a company is oversold or overbought. And we can see that only here 1974 it touched like this lower band, and then here it almost touched. 2008 it touched, and now it touched. So it's like 3-4 times that it went this oversold. So that's why I said a few weeks ago that this was a buying opportunity at 130, because this only happens like 4 times in 50 years. So a very rare occurrence. So technically a few weeks ago it was very oversold technically, which was a rare occurrence. But let's look at the fundamental intrinsic value. First, we're going to look at the PE ratio. The PE ratio right now is 26.09. And if we look at the last 5 years, it's pretty much average. So based on PE ratio, it's just fairly valued. But let's go more in depth and use a discounted cash flow method based on Warren Buffett's owner earnings. So let's find the intrinsic value of PepsiCo. In this calculator, I filled in all the numbers of the latest numbers, also the net debt of the latest quarter, second quarter of 2025. And we are using a earnings growth rate of only 3% because the last 5 years was like 8%. So this is a very slow growth, low growth stock. This is not your Nvidia or Microsoft. This is like a defensive stock. So a defensive stock you should only buy when it's really cheap, because if the earnings are only growing by 3%, you're going to underperform the market. You don't want to do that. But if this company is very undervalued, then it's still worth it to buy, because if a company is low growth like this, the risk-adjusted return can still be pretty good. And yeah, that's important. This is based on Warren Buffett's owner's earnings, and then we discounted like 20 years. So let's find the true value based on all these numbers, which I find like here on TradingView. And so let's calculate the intrinsic value. Here we can see it's undervalued by 21%, upside 27%. So that's pretty good. They say that the intrinsic value is $250 billion, is significantly higher than $196 billion, and true value per share is around $182. So I believe that the true value per share is around $182 here, and it's now trading at $143. So I believe that having a position in PepsiCo can give you a good risk reward. We know that PepsiCo is a low growth stock, probably like 5% growth earnings per share. But a good thing about PepsiCo is that their dividend payout is very consistent. Like here we can see their history, and you see each year they never miss a payment. Like they're very consistent, and that's great. We can see here that it's 3.97% the dividend yield. So even if the stock doesn't go anywhere, you will still get paid in cash every quarter, which makes the stock a little bit less risky. However, you should never buy a stock like this if it's overvalued or if the price is all-time highs. But right now, I think this is a great stock to have in your portfolio for the current price. I hope you learned something. Always do your own research. Feel free to like and subscribe, and I'll see you in the next video.